Welcome to Metagame. I'm Alex Rock. Today we're talking about a deal that shouldn't exist, a private equity titan and one of the world's biggest aerospace companies writing a $1 billion-plus check into the same drone startup on the same day. We're going to break down what that says about where the real money is moving in defense tech and what it means if you're still playing this category by the old rules. Blackstone and Airbus just wrote a check together. Sit with that for a second. A private equity behemoth and a European aerospace giant co-anchoring the same round in the same company on the same day. That doesn't happen. Those two don't share a table, except now they do, and the company they sat down for is a drone and autonomy shop called Quantum Systems. And the number they put on the table was $1.2 billion. That's the Series D, $1.2 billion, reportedly announced at the top of July. And here's the part that should make you sit up straight. That single round more than doubled the company's valuation to roughly $8 billion. Overnight, one raise, double the price tag. Now, before you take that to the bank, let me be honest with you, the way nobody in this business ever is. The primary sources here were locked behind verification walls when we went digging. Cloudflare blocks, JavaScript screens, the whole nine. Every figure I'm about to give you traces to one synthesis summary, not a document I could read line by line. So when I say doubled, understand that the prior valuation was never stated. I can't independently check the math. Treat these numbers as reported, not gospel. But the shape of the story? The shape is unmistakable, and the shape is the whole point, because the shape is concentration. Here's what I mean. For years, the story in defense tech was democratization, scrappy founders, small checks, 1,000 flowers blooming across garages from Palo Alto to Talon, venture capital funding the underdog with a better missile. That was the narrative. That is over. What's happening now is the exact opposite, and Quantum Systems is Exhibit A. The biggest checks in this sector are no longer coming from venture capital. They're coming from private equity balance sheets and corporate strategics. Blackstone, Advent, Airbus, plus a firm called Notius. 4 co-leads on one round. Let me break down why that matters, because it's easy to miss. When a traditional venture firm writes a check, they're buying a lottery ticket. High-risk, 10-year horizon, spray and pray across a portfolio and hope one returns the fund. That's the venture model. But when Blackstone writes a check, that's not a lottery ticket. That's an institution treating a company like an infrastructure asset, like a toll road, like a power plant. And when Airbus writes a check alongside them, that's not a financial bet at all. That's a strategic acquirer planting a flag, saying, we want to own the roadmap and we'll pay to sit close to it. 2 completely different animals, hunting the same prey in the same round. Back to the story, because the prey is category leaders, and that word matters. The money isn't spreading out, it's pooling. It's finding the handful of companies that already look like winners and drowning them in capital. Quantum Systems builds what they call software-defined autonomous systems across air, land, and sea. Translation: drones and robots that think, coordinated by software instead of a guy with a joystick. That's the category everyone wants exposure to right now, and rather than back 12 versions of it, the smart money is deciding the winner early and writing checks big enough to make it self-fulfilling. And here's the tell. This isn't one deal, it's a pattern, and it crosses borders like it doesn't see them. Cross into Canada. A startup out of Ottawa called Dominion Dynamics pulled a $100 million Series A, led by Georgian, with Valor Equity Partners in the mix. The synthesis calls it the largest round in Canadian defense history. Now, the largest in history is a characterization, not a league table I could verify, so don't quote me at a dinner party. But $100 million into a Series A, for a defense company in a country not exactly famous for its defense unicorns? That's not incremental, that's a statement. And notice the stage, Series A, early. The concentration isn't waiting for these companies to mature, it's finding them earlier and betting bigger, sooner. Now cross the Atlantic to Paris. A company called Alta Aries raised 50 million euros in a Series A led by Air Street Capital. What do they build? Autonomous interceptors and edge AI air defense. In plain English, AI that shoots down drones. Counter-drone systems, the thing every military on Earth suddenly realized they needed about 2 years too late. 50 million euros, early stage, strategic and crossover money chasing the exact same autonomous systems category. 3 deals, 3 continents, 1 theme, all of it clustered inside a 30-day window. Germany, Canada, France, air, land, sea. And the sky above all of it. And the checks getting written aren't venture-sized anymore. They're PE-sized, strategic-sized, infrastructure-sized. So what does that mean for you, sitting there wondering where the alpha went? It means the game changed and the scoreboard didn't update. If you're an allocator, still modeling defense tech, like it's a venture category, with venture return profiles and venture timelines, You're pricing a market that's stopped existing. When the largest checks come from private equity and corporate strategics instead of traditional VC, two things get squeezed, and you need to know which one. The first is the exit window. Think about it. A traditional venture fund needs an IPO or an acquisition to get liquid. But when Blackstone is already on the cap table, the exit logic bends. PE holds longer or engineers its own liquidity. And when Airbus is on the cap table, the acquirer is already sitting in the room. The strategic buyer isn't a hypothetical future event. They're a current shareholder. That compresses the exit window from someday, maybe if we're lucky, to the buyer is already at the table taking notes. The second thing that gets squeezed is valuation discipline. And this is where I get nervous, because I've seen this movie before. When a company doubles to $8 billion in a single round because 4 deep-pocketed co-leads decided it's the winner, price discovery goes out the window. Nobody's negotiating hard when everyone at the table wants in and the checkbook has no bottom. Concentration feels like conviction on the way up. It feels like something else entirely on the way down. And when the money is this concentrated in this few names, the whole category becomes a bet on a handful of cap tables being right. So which is it? Is the exit window compressing, or is valuation discipline the thing that just got shredded? Here's the uncomfortable answer. It might be both. The strategics get their early access and their guaranteed seat at the acquisition table. The founders get validated at $8 billion. And the discipline? The discipline is the thing quietly paying for all of it, buried in a valuation that doubled on a round I couldn't independently verify because the source page was hiding behind a security wall. That's the metagame here. The winners in defense tech aren't being discovered anymore. They're being anointed, chosen early, funded massively, and insulated by the kind of capital that doesn't blink at a $100 million Series A or an $8 billion valuation on a company most people had never heard of last quarter. The long tail of scrappy defense startups still exists. It's just no longer where the story is. The story is the top of the pyramid, getting taller and lonelier and more expensive by the round. And if you want the single number to carry out of here, carry this one. $1.2 billion into a single company, doubling it to $8 billion, reportedly, overnight. That's not a venture round. That's an infrastructure investment wearing a startup's clothes. Which brings me back to that table. Blackstone and Airbus sitting down together, writing a check that doesn't make sense in the old framework. It makes perfect sense in the new one. The PE giant is buying an asset. The aerospace giant is buying an option on the future of warfare. And they're both buying it in the same company because the market has decided there are only going to be a few winners in autonomous defense systems. And the price of being early to a winner beats the price of being right about a loser. Every time. The check told you exactly what they believe. The only question left is whether you were reading it or still waiting for the venture playbook to come back. Thanks for listening to Metagame. I'm Alex Rock. New episodes drop regularly. If this one made you think differently about where capital is going, share it with someone who's still using the old playbook. See you next time.
Grab news. Thomas.